TheoTrade. This is Don Kaufman. February 1st, 2023. There's just about 7 minutes left inside of the trading session on this Wednesday afternoon, the Fed Day. And it looks like we have got some Fed-induced irrational exuberance in this marketplace. Nevertheless, as I say that, the markets are coming off right now from their highs hard and fast. Let me break down some of the action from the Fed, but more importantly, forward looking, because I'm going to tell you right now, if you think that some of the volatility is played out, well, think again, because taking a look, and we're actually going to start there, forget about even a chart. Let's go to the SPX, and I'm going to tell you exactly why we're going to go to the SPX. One of the things that is quite bothersome is that, you're looking at this, you're like, volatility has come off, and you recognize, hey, wait a second. So you start opening up some expiration cycles. This is today. This is like literally, you've got a couple of minutes left inside of the trading day. There's still a $10 expected move, which is pretty insane. Go a little further out, though, and you all of a sudden see this nice big bump up in volatility to 26.5%. You still have almost a $65 move being priced in just between what? Between now and Friday. That just leaves Thursday and Friday. Obviously we have earnings coming out from Google, and you got earnings coming out from Apple and Amazon, all basically on Thursday after the close, which is consequently packed in to some of the risk clearly for Friday. But more importantly, you've got jobs numbers coming out on Friday morning. And I got to tell you, you would think that after the Fed, things would kind of calm down a little bit. It's anything but calm right now. So what we have seen thus far is quite the degree of volatility ultimately playing out. But as I said to you a moment ago, it's far from over. I mean, really, the next two trading sessions, it's once again going to be Mr. Toad's wild ride. As I said, today is a little Fed-induced irrational exuberance. However, if you listen to the Fed, they were anything but constructive, like in terms of being bullish on the marketplace. I thought that some of the commentary was just downright hostile in terms of trade, which brings up the fact that again, people are looking at the S&Ps and you're like, it's a tremendous rally right now, and it is, but we're still well short, okay, of the oh so important, and I've mentioned this level time and again, this 42.11. And I said this, on last weekend's video, and I'll say it again here on this Wednesday afternoon. I'm rather surprised we haven't actually tagged, if you would, the 42.11 at this point in the game. We started this trading session pretty much halfway between that 39.31 and the 42.11. The week obviously is far from over. A lot of earnings could actually shift order flow in a hurry. But again, this is a very fluid situation. All right, moving on, okay, from where we're presently at. We're going to go back to the SPX to wrap this up. One of the other areas of critical contention right now is the bond market. The bond market exploded higher. I mean, just exploded higher, almost a 2-point move inside of the bond market off of the FOMC announcement. And this is where I was entitling it, a Fed-induced irrational exuberance, because again, the Fed was maybe a little hostile when it came to, again, the raising of rates, and effectively said that they're not done yet, but the marketplace didn't listen. Okay, if you take a look at the TNX, which is the 10-year, upon again that those Feds coming out there, the actual speech that he did, I mean, look, the interest rate ultimately collapsed. And why it's interesting and why I think that this is fairly pivotal, like, who cares? The 10-year came back down, because the financials are dragging right now. And if you take a look at the financials, there's a wicked reversal that has actually happened, okay, along with the fact that the energy sector is down some 2%. So time out right now. What you have in this marketplace is a wicked and dangerous bifurcation. What you have to be really mindful of is that the financials plus energy at this point, okay, mean every bit as much as big tech. So if you're looking at Apple, like Apple's going to save the day on Thursday, or, if you're looking at Amazon, they're going to save the day. They'll save nothing. So long as these rates, if like we continue higher in bonds, taking interest rates lower, Okay, they're going to come for those financials. They're going to come for them in a big way. And right here, unequivocally, is what stalled out the S&Ps. And you're saying, well, it's still a 1% rally. And I would agree. But that 1% rally, I mean, look, you should be up 80, 90, maybe 100 S&P handles if the financials participated, but they didn't. Okay, financials plus energy, it's a lead weight around this marketplace neck. Okay, be completely aware of that, though, in just the days to come. Is you've got to keep eyes. And I've mentioned this just in numerous times in the weekend update. I'm like, the next major move in this marketplace is all about the financials. It doesn't matter that the S&P is spurted to the upside. I'll have some fun with that one. You're in a bit of a gamma squeeze. Okay, it is what it is. So understand, the big player in the room right now is the bond market. The big player in the room is actually shifting the order flow inside of the financials. You already got the energy sector down. So you're knocking legs out from under the S&P 500. But all you can see right now is obviously you're like, no, it's this massive rally. We'll see in the days to come. The rally can be persistent so long as tech can carry us. But the question is, how long can tech really carry you? And if the financials truly do continue to break to the downside, like really see some sell side activity, all the upside and the technology side of this ain't going to help. And it is going to pull back the S&Ps. It's one of the reasons I believe that we're actually seeing sustained volatility into the remainder of the week. Speaking of the remainder of the week, all right, let's come back to the SPX. Into the closing bell we go. Back to the SPX for just a moment. So here we are. We're literally, right, more than halfway through the week. It's Wednesday afternoon. I like to give you what I term orientation of where we are in the week. One of the most critical things you could pay attention to is this expected move. So we're expecting just about a $95 move in the week. It's $95 higher, $95 lower. We got close today, but people, close does not count. We did not hit the upper edge of the expected move. Where do we close? Right now, yeah, we're about halfway home. About that 41.20. Again, 41.20 in the S&Ps. Into the upper edge of the expected move, you got about 41.65. So you're more than a hop, skip, and a jump away from that upper edge of the expected move. Meanwhile, I mean, right here, that's this essential point of trade, but the lower edge of the expected move, you got to get all the way back down to like 39.76. People, it's a party right now. Look, okay, there's going to be a lot of volatility to play out. Do not sit here and try to handicap, okay, all the next moves. I'm telling you, the next move, let it play. Look, the financials massively unchanged. See what they move into tomorrow. See what they look like after the jobs number. It's not going to necessarily be Meta after the bell today that's going to rock markets. No one cares at this point. Take a look. Meta, it's a rip and rally. Hey, newsflash, it's already up ultimately what? Okay, 22% year-to-date basis. Okay, how much more upside potential is there? I would say it's probably limited, and you need to keep that in mind. Again, you've got to have other sectors in play to now effectively move the S&Ps. Those sectors, okay, it's going to be that financials, and it's going to be the energy sector. Meanwhile, at the exact same time, as I said, that expected move, you're only halfway home to the upper edge. There's a whole lot of volatility to play out. Do not forget, throughout the course of this week, okay, I know it's just Thursday and Friday left, be checking this expected move at a $65 move. With only 2 days remaining, put on your big boy pants, a lot of volatility. As I said, Fed induced irrational exuberance. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.